Hey guys, Be Twice here. Today is Wednesday, July 14th. Another very interesting day in the market where it seemed like everything and its brother was dying a horrible, horrible death. A lot of small cap stocks, super beat up, dropping crazily as if we were in a complete correction, and yet somehow the market is like slightly positive because Apple's just out here destroying everything. Uh, Kind of funny actually. But with that being said, let's jump into looking at some stocks. We're going to look at some EV stocks. I had a lot of people asking to look at NIO, Tesla, stuff like that. So we're going to look at those first, and then we'll get to SPY, QQQ, and IWM. So Tesla, I've been calling that this dip would happen down to somewhere in the 660 range, and that would be a buy. It looks like we're looking for bottom right now. With that being said, I do think that we're awfully close if we haven't already reached a bottom, if we didn't already hit it at close today. And I see this being a 2. This was the line I drew before, so clearly we came right around where I thought we would go. And ultimately, I see us ripping from here into the 700s. And then if we can get some good earnings, we might see Tesla back above 800 soon here. Hopefully, we do. I am long Tesla, so I really hope that we will get this rip that we have been waiting for. Okay, NIO. So I have no position in NIO. I'm going to say that in the beginning. Basically, what I saw before when I was looking at this is that we had an ABC correction and that we were looking to either pop one more time to the upside and then get rejected to come lower, and that would be the bear count, or the bulls were saying, hey, we've already bottomed and we're heading up to this $80 range sometime soon. Based on the price action we saw today, it appears the bear count is correct. What I'm seeing is that we popped up for a 1, took that, which we ended at 55. That was the top of our wave 1. We pulled back for an A, up for a B, pulled down for a C, and now that we've broke below the C, I'm saying that this is a double correction. So this is a W, we popped it for an X, and we're going down to find our bottom for Y. So this is a buy zone. So this is a WXY is a 7 swing correction, and it's a great spot to find a buy. So normally what you want to look for is somewhere between the 61.8% extension and the 100% extension. Happens to be that the 61.8% extension of the wave Y happens to fall right at the 61.8% retracement of this whole wave up. That's a coincidence. It doesn't always happen like that. But with that being said, I really like this $40 range as a buy zone for NIO. So if you're not already in, which I'm not, I will be creating a alert because I want to know when NIO goes to 40 a share, and I will probably go long shares at that point, and then I'll wait for confirmation that we have bottom before I'd go options, because the reason for that is because you could go all the way to the 100% extension and still be a wave 2. Hell, you could go all the way down to $30 a share and still be a wave 2. So we want to wait for confirmation that we've bottomed and we're starting to pop up before you'd want to go with call options. But with that being said, I do think all dips from here are a buy on shares, especially because we should be getting pretty close to bottom on NIO. But unfortunately, I do think there's still going to be some more downside. So don't kill me for that. All right, so CCIV. I love me some CCIV. I'm in CCIV. I do already have a position. Looks like I was buying the dip and it just keeps on dipping. It's one of those. I saw this before as possibly the full correction because we stopped at the 76.4% retracement. Because the way what I'm seeing is that we popped it for 1, pulled back for a 2, and that we've now popped it for a 1 and we're pulling back for a 2. And I thought this 2 was bottom right here. I was wrong. It looks like this is a 5-wave impulse down for an A. We had a 3-wave move up for a B, and now we're on a 5-wave impulse down for a C. I think that this is a great buy range, and I have been buying this dip. I'm hoping we'll catch support around 23.50. We could go as low as the mid 22s, as long as it doesn't cross this like 21.85 range. If we pass like this 21.85 range, that's invalidation for my account. That's not good. I probably would shed some of my position. I don't think I'd shed all of it because I am long CCIV for the long term. But with that being said, it will invalidate my wave count and it will invalidate my price target of 40. So let's really hope we hold this level. And I'm still going to stick to the gun saying that all dips here are buy. And the lower we get closer to this orange line, I will probably be a buyer up until we cross it, and then I'll have to evaluate my position. But I do still think that as these flushes are happening across the market, that this is a great buy zone. All right, XLF. I'm long XLF, and I continue to buy these dips, and I'll show you why. I see it going up towards $40 a share. Calls are extremely freaking cheap. So if it does end up going up to 30 or 40 a share, you can bank on this guy. I already have put money in, got more than 100% gains, took it out and put it back in, and now we're just looking for this bottom. So what I'm seeing is that we pulled up for a 1, we pulled back for a 2. We rode this guy up for a 1, which we peaked right here, and now we're in the process of pulling back looking for our wave 2. We may have already found that today. Now, I put a W with a question mark, meaning are we going to see a complex correction? If we see a complex correction, what that means is we're going to pop up to here, we're going to have an X. I didn't draw it because this is a little bit of a cluster F right here. So this would be an X, and then we're going to flush down for a Y. So if we have a complex correction, we might go as low as, 35.7. We could go even lower. As long as we don't pass this 35.47 range or 35.5 range, as long as we don't pass that, that's invalidation. So I have an alert drawn on that level as well, because if we cross that and the market's going into a complete correction, it means that my wave count is wrong and that we could be going significantly lower. So we'll watch this, but I do still say all dips on XLF are buy, and I still do see us going up towards 38 for our wave 3, and then ultimately heading to 40 for our wave 5, which would be this purple wave 3. So all dips remain a buy in XLF, and I will continue watching it and likely buying if we go a little bit lower tomorrow. All right, so SPY. I talked about yesterday how I saw a pullback taking us somewhere down to 434. We didn't go all the way there. It looks like we might have got somewhere in the 434 range. Okay, so I drew this line yesterday about this dip that we'd probably see and then head up. That's exactly what we followed so far. I didn't remove it. That's exactly what I drew yesterday. So we did pull back. Now the question is going to become, are we going to fail again and pull back lower and head down to this flush that's going to take us to the 434 range, or maybe this 433 support right here before going higher, or did we already bottom? I'm hoping we already bottomed. I rolled the dice and I did buy a call on SPY, a lotto, just because every dip seems to get bought up so quickly. So today I did buy the dip, hoping that we'll rally to 440, probably maybe early next week or something like that. But don't be surprised if we see another slight flush tomorrow. So if we do see another slight flush tomorrow and it gets us back into this 434 range, I would buy that, but just be smart about your risk because of the levels we're at. But I do think that you could get a quick pop up to this 440 range before we see a bigger flush to the downside. And if you're playing short term, you can get some pretty decent gains off that. So with that being said, I do think that in this 434 range, SPY is a buy, and we're looking at a target of 440. The closer we get to 440, I do think ultimately we're going to get a couple percent flush down at a minimum one before we get our rally up to break all-time highs and then ultimately go up to somewhere by this trend line until we get to the actual pullback. Now, like I've been talking about for the last few days, stay hedged, stay hedged, stay hedged, because if my counts are wrong or if you make a mistake, you want to make sure that you're not going to blow yourself out, even if that means just holding cash so that you don't get completely wrecked if the market goes down. Okay, QQQ. I think this one may have already bottomed. One pullback for a 2. It looked like a really, really shadow bottom. Um, I wasn't as convinced about this one because of the price action we saw today. Plus, I'm long Apple and Amazon and stuff like that. So for me, it was kind of like I don't really need to add any QQQ. But we could have bottomed or we might pull a little bit lower. But either way, I do see this area as a potential spot for a bounce as well, even possibly as low as like the 360 range. And then ultimately from there, I do think we're going to rally somewhere up here by 370. Probably right around 368, 370 is where we should find our top at the same time that SPY is hitting 440. But let's see if we can get there. All right, IWM. So IWM is getting very, very close to my invalidation, and I don't like it. But with that being said, I am still in IWM, and because of how close it's getting, I actually doubled down on my position today. And really, it's just because it's at this point, it's risk reward, right? Like I'm not going to lose that much more money if we pass my invalidation here, because what I thought I saw before is that we were pulling back for a 4 and that we bottomed here for a 4. So because I thought that this was bottom, right, but this trend line for a 4, I'm like, oh, we're not going to go back down any lower. So I thought that this was going to be bottom and that we had popped up for a 1 and we were in the process of pulling back for a 2. So I started buying this dip right around what I thought was C. See, we had an A, we had a B, we had a C. So I started buying this dip right at C. Sorry, let me move it. So I started buying it right at C. We rallied up. I caught the bottom I was like, oh, great, that's awesome. Ultimately, just to catch a huge flush today where small caps are just getting absolutely decimated. So then the question becomes, did we just have a W here? I didn't draw it because it's kind of cluttered, but then we'd have a W here where the C is. We had an X here, and we're looking for our bottom for Y. So risk reward, I do like IWM right at this level as a buy, because if we fall below this trend line, there's not a whole lot of downside, right? Because if you break this invalidation, you get out of the position and you wait for confirmation for it that it's gonna rally back up. Because ultimately, if we do rally from here, I do still like for 230 as a price target for our wave three. So that's a pretty big gain from where we currently sit at 218. But small cap is getting destroyed right now, so we have to be careful at these levels and just make sure that we risk appropriately. So, all right, guys, if you like these videos, go ahead and hit like and subscribe. If there's any specific stocks that you want me to kind of look at, even if I don't have time to do a video on it, you can always tweet me. I look at that much more often than I look at the YouTube comments. So just an FYI. All right, guys, if you like these videos, go ahead and hit like and subscribe.